Hey everybody, it's Chris with Life 180, and welcome back to my review on Doug Andrews' Laser Fun book. And in this book, I'm going to go through chapter 2, which is Escape the Tax Trap. And I think this is probably going to be the chapter that I agree the most with Doug Andrew throughout his book here. And what I want to do is just get into it and record this and get into my screen and get into this chapter. One of our favorite places to go is Alaska. So he starts with stories. He talks about the tax trap, and he talks about too many Americans fail to comprehend that at retirement they'll likely find themselves in a tax bracket that's higher than what they were during their working years, and that's very common. He's 100% right. I talked about that in my review in the last video. When you see me marking this, my mindset, and I'm not perfect with it as I'm going through and doing the notes, but I have a color pen. I'm reading on my iPad. And green is where I typically agree with him in my notes, and I use a red color when I don't agree with him. So you'll see there's a lot of green here. He talks about the fact that when you're getting a tax deduction this year, you're postponing taxes. A great way to look at postponing is procrastinating. You're kicking the can down the road into an environment. We're in an all-time low tax rate environment. You're kicking the can down the road into an environment where chances are taxes have to go up, right? I mean, that's just the reality of the situation. When 401ks were created, it was a great thing because taxes were higher in 1981 and 82 and 83, and that's when 401ks were created. So if you could defer in a higher tax rate environment and take your distributions, now in a lower tax rate environment, that makes sense. But when the problem with 401ks is that the world changed around us, right? The rules of the game changed, so to speak. All the moving parts in the game changed, but people didn't shift their strategies because people aren't thinking about it. The really wealthy people of the world did, and that's it. So I wrote here, plus it's likely taxes will go up because of the national debt and unfunded liabilities, and that is true. I wrote great. See, I don't dislike everything Doug does. We often offer the following propositions to our audience saying, let's say you and I go into business together. You're going to do all, oh yeah, I love this story. I got to give him credit. This is a great story. I like the way he describes this. So we often go into the following propositions to our audience saying, let's say you and I go into business together. You're going to do all the work, but I'm your partner. If the business struggles along the way, you're on your own. I won't offer any financial protection. And from the word go, whatever you build this business to be worth, when you sell it or liquidate it, I get a third of it, okay? I get a third guaranteed, but if I'm hard up at the time, I reserve the right to increase my percentage. And if you want to sell early, I'll charge a 10% penalty in addition to my third. And if you want to sell it later than you want to, I can force you to sell it and pay my portion sooner than later. How many of you would go into business with somebody like this? Nobody. And when you put it into terms like that and into that perspective, you're basically, everybody's like, that's the most ridiculous thing I would ever see, and nobody would ever do it. But ultimately, he just described an IRA and a 401k, any kind of qualified account. That's what's going on. And he goes down to describe, if you try to take money out before you're 59 and a half, you get a 10% penalty. Once you hit 7 and a half, you've got to take required minimum distributions, RMDs, or you take a 50% penalty. They completely control. When you put your money into a 401k, most people don't realize, I did a whole video series on this called The 10 Perils of Your 401k. I would suggest everybody go watch it if you're putting money into a 401k. And that's really horrible. It'll protect you to really understand what you're getting involved with there. You have to consider inflation and how that's going to impact your standard of living, your need for money, and your quality of life years from now. If you understand the rule of 72, take any number, whatever inflation is, divide it by 72, and that's how many years, or take 72, divide it by that number for inflation, and that's how many years it's going to take for your cost of living to double. So if it's a 3% number, right? So what is that? If it's 3%, 72 divided by 3, I think is 24. Yep. So that means if it costs you $100,000 to live right now with 3% inflation, it's going to, in 24 years, that $100,000, you're going to need $200,000 to maintain the same standard of living. So the problem is a lot of people are not taking inflation into consideration when planning for their future. Taxes and inflation are the greatest erosions of wealth that we have. Inflation is just a hidden tax that the government charges Americans when they have no choice but to abide by it. There's no getting out of it, and they just do it. So he talks about what goes up ain't coming down. This is a conversation about the national debt. In 2007, it was 9.2 trillion. Every taxpayer could have paid $92,000 to eliminate the debt. It hasn't. It's grown to over 20 trillion by this book. It's actually at almost 30 trillion now after COVID. Very, very scary number. We're in a really, really rough situation. This is all with our debt at the time. Oh yeah, so he's talking about the fact that taxes are skyrocketing, or the possibility for taxes to skyrocket is really high. All these things that are going on in the world right now, they're talking about. Let me read this part here really quickly because I'm kind of losing my Solutions 2016 report. The Heritage Foundation announced that our national debt is 3/4 the size of the U.S. economic product. The congressional budget. Oh yeah, so basically saying the congressional budget office estimates that without fiscal restraint, public debt could exceed 100% of GDP by 2030 within less than one generation. So that's a big problem. And this is all, I wrote this comment, this is all with our debt being at all-time low rates. If our interest rates go up, a lot of people think they want interest rates to stay down so we can keep spending, and there's a lot of truth to that. But the other part that most people don't talk about is the fact that we're 30 trillion in debt, and most of it is short-term debt, and a lot of it is owed by other people in other countries. And for every 1% that our federal funds rate goes up, then we're gonna have to pay $100 billion-ish, or no, $300 billion-ish on additional interest costs on our debt with like nothing to gain from it, right? So we're talking if the federal funds rate goes up by 3%, we're talking about almost $900 billion of extra costs just to service the debt that we have, and that's just a disgusting number. So the idea here, taxes on the seed versus the harvest, talking about if you were to grow crops, another good story. A lot of financial people have used this analogy. I hear it all the time, and he just puts it in the book here. The idea, so this isn't something he created. This is just a great story that a lot of financial people use. Talking about if you were to own a farm, would you rather pay the tax on the seed beforehand, or if that seed creates a crop and with hundreds of other crops that come from it, would you rather have to pay taxes on all those other crops? Well, that's what's happening with your 401k. You're delaying, and they're saying, okay, we're not going to tax the seeds, but when you get the crops and all the extra revenue that comes from the crops, we want taxes on that. I'd rather just pay taxes on the seed, and that's what he's saying. And that's good, and that's good stuff. I mean, that really is, I like where his head's at on this bill, or on this, I've just read that. I like where his head's at with the taxes. Talking about fair taxes, unnecessary taxes. Look at this, all green check marks. So when it comes to the taxes, as you're reading this book, I agree with everything he's saying. I think it's good stuff. I think, at the end of the day, his mindset with all this stuff is great, and he's using it as marketing to sell a product that is just, as I said in the first video, and I'm sure I'll get into it more, I'll have more opportunity to do a deeper dive, is just not all he's selling it to be, and you're taking on a lot of risks. So that's it for this video. I mean, I'm not gonna grandstand longer than I need to. So if you have any questions, comments, whatever, make them below. I will engage with every comment. I can't wait to see what comes from this. That's it. Make sure, if you haven't already, hit the subscribe, because I'm gonna be doing these videos regularly. Make sure you subscribe, that way you're notified. Hit the bell, that way you get notified every single time I launch a new video, which is gonna be awesome. And hit that like if you like this video, if you found this video valuable, if you found it informative and educational. That is my objective with this, is as people are going through and reading this book and are new to this space or new to this industry, or maybe you're an agent that's trying to learn about this, and you've bought into the idea of IULs and you're trying to read this book to learn how to sell. I'm just trying to give you another perspective and another way to think about it. Once again, this is just my opinion. Take it as you will. You can, take it, throw it out. Don't listen to me, give me a call. It's really up to you. Just my opinion, and I believe in this stuff so much in what I'm saying that I'm just trying to give people this perspective so they can make a more educated, informed decision and not just get told one side of the tracks on this. So that's it. So anyway, have a blessed, inspirational day, and I'll see you on the next video. Take care.